Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin is not zero, and we have a great episode for you this week. Sam Abbassi, founder and CEO of Hoseki, the noted Bitcoin proof of reserves company, is our guest. We're going to talk with Sam about whether publicly traded Bitcoin treasury companies like MicroStrategy should do proof of reserves. Michael Saylor was asked last week in Las Vegas if he will, and he gave a very interesting answer saying no, that they don't think they should, and it might even be bad. We'll get into that with Sam and see what his thoughts are as an expert in proof of reserve. Sam's a repeat guest here on Galaxy Brains. And of course, we'll talk with our good friend Beimnet Abebe from Galaxy Trading, as always, about markets, about employment numbers and inflation, and where we are in this broader market cycle. It's a good rip with BIM this week. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes. And note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. I'm back from Las Vegas. It was a great week last week. It was a historic week. 35,000 people. I've never seen it like that. I've gone to all of BTC Inc.'s Bitcoin conferences back to 2019. And this one was just in a league of its own in terms of size, scale, attendees. Huge, big tent that David Bailey and his team at BTC Inc. and Bitcoin Magazine have created in the Bitcoin world. There was cypherpunks and politicians and business people all mingling together in Las Vegas. Truly a sight to behold. We'll post, I think, on our feed at some point the talks that I gave on the main stage there. But for now, let's hop right into it with Beimnet Abebe. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thank you for having me.
We're back. We took the week off last week. We were in many business meetings out in Las Vegas last week.
Absolutely.
Too many back-to-back business meetings in Las Vegas to do the pod.
A lot of business being done at the craps table.
I think that's only maybe I think that's maybe only the third episode we've ever skipped. I think typically the other ones are the week between Christmas and New Year's we skip. But in any case, we are back, and there are some interesting things happening in the economy. Bring us up to date on some numbers that have been published, unemployment or whatever else.
So we had ADP report their employment figures this morning. Came as a big downside miss. We printed about a gain of 37,000 jobs for the month of May versus expectations close to 120,000 in job gains. We also had an ISM services reading that was pretty poor. The headline ISM services figure printed a 49.8, which means that the service sector of the economy is in contraction territory. And that's very rare for the U.S. economy. Normally, it just chugs along in an expansion. And so, you had a pretty aggressive reaction in fixed income. Most parts of the curve have declined by around 10 basis points in yield terms. And that's suggesting that, if the labor market is really going to become a concern, the Fed's probably going to be more aggressive cutting, and therefore, yields should broadly be lower, particularly given kind of the sell-off you've had, over the past handful of months. 30s had gotten up to 5% and change. And so seems healthy that, we reacted this way to weakening of labor market data. I do think, though, that, data is still a little bit confusing right now. You had job openings yesterday print a surprising uptick in actual job openings. Growth figures for Q2 are, if you look at Atlanta Fed, they look pretty elevated. And so, there's just a lot to kind of take in, and given the uncertainty around tariffs, you don't know how much weight to put or not put on certain pieces of data. And so, I think you kind of have to stick with what the Fed is telling you, and the Fed is telling you they're on hold. They need more clarity in the data for them to have confidence. And so, you can read a lot into this data, but ideally it's just one data point in a series of data points that we'll be monitoring.
Yeah, Steve Mirren, the Council of Economic Advisors for the president in the White House, had said that he was asked if he could what his 1 year forward inflation target was, and he said it was too uncertain to make. And so, if you can't forecast inflation 1 year ahead, like how that shows the dollar is still uncertain, right? Like people aren't feeling settled yet on this. But inflation is low now, right?
It is lower, and I think there are some parts of the U.S. economy that suggest that it's going to even move lower, mainly housing. Housing market has cooled down a lot. Rents have come down a lot. That's a function of supply increasing from, new homes, new apartment buildings coming into the market. But it's also a function of just demand being very low or much lower than it has been historically. And so and it takes a good amount of time for the housing data to mechanically flow into the inflation figures that we all monitor. And so, depending on what measure you're looking at, housing is a huge component of these inflation figures and what people spend their money on. And so you're going to get a drag lower just on the back of housing. And, things like oil prices, they rebounded a little bit since this, Russia-Ukraine stuff, but, they have broadly been moving lower. And so, you could be at a scenario where inflation is kind of getting meaningfully closer to target. But then it's like, okay, well, we are having these one-time price shocks because of these tariffs. And so, are you going to see some uptick that kind of offsets these structural things happening? So it's a little bit of a mixed bag, but the anecdotal stuff that I'm hearing is like very suggestive that we are seeing a turn in like the economy more broadly. Some of the anecdotes are, just a ton of people reportedly like eating out less, right? The dollar store, there was an article out today saying that, they're seeing more folks shop at the dollar store that make $100,000 or more. And so typically what you see when, folks are feeling a bit stretched is, they substitute expensive goods for slightly cheaper goods. And so you're seeing that at places like, Family Dollar and the dollar store. And I just think that, with the student loan stuff that we've talked about, 11 million plus people getting collected on, their credit scores going down. And the other thing that constantly bothers me is, we're about to get a pretty big adjustment in the labor figures that have recently come out. The Bureau of Labor Statistics is about to do revisions like across the board, and they're going to just show jobs being lower than people thought.
Yeah.
Right. And so, all the time when we're constantly readjusting these figures and generally they keep going lower and lower.
Right.
It's like, what are you meant to believe? And like, why are we really trading like the headline prints when like realistically, like these surveys have been bad?
Yeah, they've been
right.
I mean, what was the one last year? The revision was like a historic revision.
Yeah.
Down enormously across all prior months.
Across
a year of months down.
And that like flows in, those figures flow into like other measures of the economy that, economists look at and Fed members look at. And so when you have just bad data, right, that's just like such a bad starting place, which makes me think that, the underlying economy is not as strong as people think. And, I think people generally feel good right now because stocks have just rebounded a shit ton.
What are we like 2% off the all-time highs now with SPY?
Correct.
Yeah.
And, there's an element of the market's not the economy. But there's also an element that the market is the economy because when people feel good and there's a wealth effect, they spend more.
And invest for the future, too.
Correct. And that takes stock higher. And so there's a reflexivity to stocks that, it makes them part of the economy more so than, what people think. But there's also reflexivity to the downside as well. And so if stocks do start to go lower, people will start to spend less. And that kind of,
Or vice versa, right? If the inflation ticks higher or the unemployment goes higher, then they will stop investing as much and stop buying the goods that are produced by and goods and services produced by the public companies that trade on the stock market.
100%. And the other thing is just like housing, right? It represents such a huge portion of like the average household's wealth.
Yeah.
Right. And so if you start to see like meaningful price declines or an inability to sell homes because there's just not that many buyers and there's a ton of supply, like that will have an impact. And so, I think you're meant to be cautious here on risk, given that we've rallied so much and that positioning has now caught up, right? Like a couple weeks ago, it's like stocks were rallying, but the positioning wasn't quite there. Now you're in the position where like the
Everybody had to pile back in already.
a ton of people have piled back in, and you're back to like normal kind of levels. Retail's just been long and buying, but from the real money crowd, like folks have put length back on. And yet we on the precipice of a massive Russian retaliation. You've got the Iran stuff going. I think there's a lot of optimism baked in on the trade tariff stuff, and so it kind of feels like the set of conditions are there where like the upside should be limited. But again, we are in a little bit of animal spirits in the market right now.
Yeah.
Which brings me to Bitcoin treasury companies.
Oh yeah.
That have been
There's
all
like 30
the
of
rage.
them.
There's a ton of them, and there's a bunch of alt ones as well.
I actually saw a Chinese limousine company that's going to turn to an XRP treasury strategy. So I don't know what that says about the market.
Yeah, no, absolutely. But right now those trades are working. Those treasury companies are still trading at decent multiples, but market participants are not stupid, and I think there will be a decent amount of profit taking at some point. I don't know when, and that over the long run, the premiums should kind of decline.
I mean, imagine.
But again, they might not. They might not.
No, for sure. We don't know.
The logic says that they should.
I mean, we spend years as an industry clamoring for these pristine ETF vehicles and get them, and they're huge. I mean, it's $60+ billion in net inflows into those vehicles since launch. And now they're not enough. Now we need companies that use financial engineering they're kind of like ETFs in that most of them, the biggest of them also just purely hold Bitcoin and do basically nothing else. But you're paying the concept that they advance is that you're paying the premium for the financial engineering that it's sort of like you're almost like staking your Bitcoin, right? It's like
exactly.
You're owning the shares of the company, but your Bitcoin per share goes up. That's what they're pitching. It has been working so far
absolutely.
But it does have the feel of one of those trades that's going to get totally blown out at some point. I mean, how many
very
of them
grayscale premium-y.
It feels like that. I think it is different, but it's also similar in some ways.
No, absolutely. And I think that there's just so many signs of froth in the market, and these Bitcoin treasury companies are part of that. It does kind of feel like
crypto's here. It's mainstream.
It is mainstream.
The 35,000. You were at the conference. You see how many people there were?
So many people.
Yeah, and
the energy was electric.
It does feel like in the market, the stock market, including cryptos in the stock market, not like necessarily that the companies are valued, but that there's many of them. There's all these treasury companies. Most of them are public. That's the way they do it. But at 105, it doesn't feel super frothy in the corn itself, does it?
No. I mean, leverage isn't like where it used to be, and basis isn't like exploding per se. It feels healthy in BTC, but I also think like the fundamentals for BTC just keep getting better by the day. I mean, just look at the budget bill that's about to get passed.
The big beautiful budget.
The big beautiful.
Is it
budget.
actually called that? The
big beautiful bill.
It is.
And so whatever. I mean,
most places, including the CBO, are scoring that at adding $2 trillion,
$2.5
to the deficit.
Yeah.
So to the existing.
No, it takes the deficit to
$2.5 trillion,
and then on a go forward just adds
That led to was it Moody's that finally also followed suit and downgraded?
So that was a couple of weeks ago.
Yeah.
But realistically, it's also taking eliminating the debt ceiling, right? Like that's a big step.
I for one liked that they have to get their stuff together every 8 to 16 months and go and raise that debt ceiling. At least make them do the indignity of admitting that we're deeply in debt. Removing it now? Is that in the big beautiful bill? The removal of the.
I believe.
I know
so.
they've been talking about it.
I
think it was even Elizabeth Warren tweeted that she and President Trump are in agreement on this. So
But normally, you know, I like it when there's tension in Congress, when you have to work together to get stuff done. Like it's meant to be a system of checks and balances, and normally that friction, you know, leads to some reasonable outcomes.
Yeah.
And so I'm with you that
Yeah.
you know they should be forced to think about, do we really want to do this?
Make them take the hard vote on raising the debt ceiling.
Yes,
if they're going to do
it. But again, like realistically, like it's always going to get raised.
Yeah, I know.
It's always going to get
I'm saying
raised.
make them
And so
have the
maybe it is
performative
operationally
indignity, but you're right.
easier. But you know, the deficit stuff though, it's just super hard to ignore.
Yeah.
Like the math doesn't add up, right? The math is you need more dollars to finance the debt, right? And so the question is, are the dollars in circulation right now enough to allow you to issue more debt and more deficit spending, basically? And at a certain point, right, you're going to cross that threshold where you need more dollars in the system in order to facilitate these deficits.
And that basically is a debt spiral there, right? I mean,
no, that just means
that's where
that
you're printing just to pay it.
Correct.
And
So you
it
are
escalates it.
Yes, and so I don't know the exact numbers, and it's really hard to like be like, oh, in 6 months' time, the central bank has to print money. But the variables are kind of there, right? So I think you have around $3.5 trillion in excess reserves parked at the banks, at the Fed, right? That's what's earning interest on excess reserves. There's about $160 billion in the reverse repo facility, right? And so, you know, like even if you change banking rules and stuff to add like treasury buying pressure, and even if you account for the additional dollars generated from the interest that's getting paid out to folks that own these treasuries or the banks that are parked at IORB, like net, like you still are draining money from the system, right? Net of all of those things. And so at a certain point, the Fed will have to print more money. And I'm guessing that's probably going to be within a year.
All right. Bitcoin tends to react positively when the Fed prints a lot of money.
Correct. And so do other nominal assets. But then, you know, again, will that bring inflation? Like it's just so hard.
It's just the never-ending saga.
Yeah, and the Fed's like stuck between this rock and a hard place. It's like, okay, yeah, I'm going to cut interest rates by 50 basis points or 100 basis points. And it's like, okay, good. Maybe that makes sense in the context of inflation and where, you know, stuff is headed, and that helps relieve the debt burden. But again, that's stimulative policy, and you might get an uptick back in inflation again. And so, right, like how many people are on the sidelines in home buying, right? Like if interest rates drop 100 basis points, like how many more people?
How much does it heat up? Some number.
Some number, and then how many people are going to refinance?
Oh,
right.
Almost everyone that recently bought.
Correct. and so it's just like, wait, what will that do to you know, home prices and other things? So it's a very interesting time in markets.
Yes,
fascinating.
Well, I enjoy talking with you, and I know our audience loves hearing from you, Beimnet. Our friend Beimnet Abebe from Galaxy Trading. Thank you so much.
Thank you for having me.
Let's go now to our guest, Sam Abbassi, founder of Hoseki, the well-known Bitcoin proof of reserves company. Sam, welcome back to Galaxy Brains.
Thanks for having me again, Alex.
It's always great to have you on. And you were on, I think, last year, at the beginning of last year, I think a while ago, beginning of 24. And we talked about proof of reserves, and we're going to talk again about it. Sam and I always love talking to you. We worked together at Fidelity years ago. Sam is one of the members of the vaunted and well-known influential cabal known as the Fidelity Mafia, slowly taking over all of crypto. But there was a news item that, you know, prompted us to have this conversation again and to re-up our conversation. We were talking about this at the Bitcoin 2025 conference in Las Vegas last week. And on that Monday, just before the conference, there was a side conference hosted by Bitwise, Bitcoin Investor Day or something like that, where Michael Saylor was asked why MicroStrategy is not doing proof of reserves. I'm going to roll a clip and then let's talk about it. This is what he was asked.
Does Strategy have any plans to publish their on-chain proof of reserves?
Yeah, proof of reserve is an interesting thing. Let me make the following point. A lot of people learn stuff from FTX and Mt. Gox, but I'm not sure they learned the things that the institutional community needs to learn going forward. The current conventional way to publish proof of reserves is an insecure proof of reserves. It actually dilutes the security of the issuer, the custodians, the exchanges, and the investors. It's not a good idea. It's a bad idea. It's like publishing the address and the bank accounts of all your kids and your phone numbers of all your kids, and then thinking somehow that makes your family better. It doesn't make your family better. So no institutional grade or enterprise security analyst would think it's a good idea to publish all of the wallet addresses such that you can be traced back and forth, and every future transaction can be traced. I would say go to AI, put it in deep think mode, and then ask it, what are the security problems of publishing your wallet addresses, and how might they undermine the security of the company over time? It'll write you a book. It'll be 50 pages of security problems. So the problem with proof of reserves, the way that people do it right now, is it's first of all, it's a proof of assets that is insecure, and it is not a proof of liabilities. And so if you really want crypto security.
So that's the end of the clip that I have. I think he goes on to talk about needing to use big four auditors and some other things. But Sam, what is your reaction to that clip right away?
I mean, there's a lot to kind of go in there or go into. I mean, there's a few different ways to assess it. I think one is sort of the more adversarial approach, which is that something could be wrong, and maybe obscurity, which is kind of a function of traditional finance, is sort of what people are leaning on and what Michael Saylor might be leaning on. The other is maybe a more fundamental sort of misunderstanding of some of Bitcoin's core value propositions, which really is the audit functionality that it has and offers.
Yeah, he's saying that it's insecure to publish your wallet addresses. Bitwise has published their addresses. Is that right?
They have. So has Metaplanet. Publishing, I mean, that's a core function of Bitcoin. It's a public ledger. It's the most transparent form of money we've ever had. So the idea that sort of being public about information that's already public, for me, just is a non-starter. I mean, if you look at Arkham, for instance, they've already basically surveilled and have made assessments on what MicroStrategy is holding. If you're moving, transferring, buying, executing, settling billions of dollars worth of funds, that's not really a secret when the whole thing is out for everyone to look at.
Yeah, and also, do you have to publish your addresses publicly to do proof of reserves?
No, you don't. I mean, even the term proof of reserves, and this is a function of Bitcoin being a technical thing. The very technical people sort of developed early on. Naming things is really complicated. So even defining what proof of reserves is has been kind of ambiguous in the space. He mentioned liabilities, for instance. I think what most people assume and what most people promote when they talk about proof of reserves, and this is what we do as well, is just the on-chain assets. So for instance, on our public community board, that's just the assets, and there's no public address that's disclosed. Bitwise, for instance, is public about their addresses. But when they use us, they're simply verifying that we've done some cryptographic magic under the hood. We've done some sort of third-party assessment and actually verified that those funds are there without disclosing the public addresses. That's a middle ground because, again, this does seem like it's a pretty big break from how traditional finance functions. So this for us is like a bridge until we get to full disclosure of public addresses, which is not a security issue at all.
Yeah, I mean, you send your public address to any person when you ask them to send you Bitcoin.
Yeah, I mean, granted, if you're not a Bitcoin native person in the space, you might think that you're publishing your private keys or that there's some custodial risk and someone could steal funds. But as you know, and as I know, and as most listeners know, that's not the case. You're simply publishing the address that has the authority over these funds, but there's no security compromise on actually moving funds at all. So that for me, it might be a fundamental lack of understanding on how this thing works and what the value props are.
Could it be operational at his custodian that is driving this? Like,
Yeah.
they would have to sign with some keys at some point to prove ownership, right?
So there's a couple different things. I mean, if we're, and let's just be fair, I don't run a public company, so I'm sure there's caveats here that I just don't have, that I'm just not privy to, but there's SEC compliance. So public companies, they have to follow strict rules for material disclosures. If wallet addresses or POR data is seen as material, then disclosing them might require some kind of regulatory review, board approval, or legal vetting. There's also, Sarbanes-Oxley. I mean, if wallet holdings are published externally without going through that type of complying controls, executives could be liable if something is wrong or inconsistent. And then there's also insurance and custodian contracts. Custodians often prohibit public disclosure of wallet structures under NDAs or insurance policy terms. So, matching what he said or his answer to that question and part of what he got into in the podcast that you guys recorded, I think earlier this year, I think some of that might be more of constraints that he might be facing as a U.S. public company. On the operational side, most of these custodians are holding these funds in omnibus wallets, which means that they're not sort of segmented by address. So it's impossible to really provide cryptographic proof over one segment of it, because that would simply disclose the ownership of an entire wallet. Whereas MicroStrategy's holdings, in, let's say, Coinbase or Fidelity or wherever they're holding it, might be in only a few of those addresses that's inside of that omnibus structure.
Yeah, that makes sense to me. My guess here, well, the reason I don't like the security answer, because I think we don't agree that it is a risk to simply to publish the addresses. I think it's possible that operationally at the custodian, whether they're because they're in omnibus or let's say they are in segregated addresses for MicroStrategy, we don't know. I could imagine that if they're most likely in omnibus, cold storage wallets, that makes sense. And so it would be a pain, I guess, or maybe not. It would be some different structure than they've negotiated as how they're going to do custody for MicroStrategy. But that, then they would have to move them around a bunch. And technically, if you do have to go in and sign, that presents a security risk at that moment, right? But obviously, Coinbase or any other custodian that does this professionally is not saying you can never sign a transaction out of your cold storage. They do let you move it out there. It's not like it's impossible. So my thought is maybe it's just this operational burden, and they have so much Bitcoin, it's blown out across so many wallets or in so many omnibus wallets that it's just like a pain in the ass, and they don't want to do it.
Yeah, and I think that my position here is that Bitcoin's auditability and proof of reserves as a function of it is, I think it's primary killer use case once it's sort of I guess practically probably it's killer use case, but a lot of these custodians, and this is just from conversations we've had with exchanges, they built their custody solutions without designing for transparency. So retrofitting POR might require a lot of backend overhauls or wallet restructuring. At the very least, if you've got private keys and some incredibly secure setup where it is incredibly onerous to access, then doing so for marketing purposes, at least to a certain extent, just might not be that feasible either. So to be fair, there are constraints both on him as a public company, but also with their own custodial setups.
Yeah, that's my guess. But that's what makes it so strange to me that he's then making the security argument. The only thing I can think is that he's talking about the custodian going in and moving around his coins and then signing. Maybe he's been told by the custodian that that's a security risk, but it doesn't seem like that good an answer.
Well, potentially, it's frankly, it's not a good answer. There's and he sort of doubled down on that video that you played, but in the podcast you guys recorded, I think the main thing he was leveraging was auditors, and that just speaks to sort of audit theater, as I sort of call it.
Yeah. Let's pause for 1 sec. We'll roll that clip from the podcast I did with Michael Saylor in December. Have you thought about either your either qualified custodians or in general, if MicroStrategy would perform a cryptographic proof of reserves? Is there interest in that? Because in addition to being the world's best settlement network and best asset, it's also the most transparent asset, right?
Well, we're continually auditing our custodians, and we're continually auditing our reserves. And there's an auditor backing up the auditor. There's a finance team backing that up, and there's another process backing that up. The question of what we disclose is a more complicated situation, because there are certain practices for a regulated entity in the United States, like for example, right? J.P. Morgan's not going to disclose to you where they keep the computers that run your bank accounts in order to create transparency. And so there are certain disclosures that would actually be viewed as more risky for a public regulated company. And there are other disclosures where where the people that we work with wouldn't be allowed to make them either. So that's a balance. What I would say is that entire best practice is evolving pretty rapidly at this point because there's so many eyes on it and there's a lot of people thinking hard about it. And I think it'll continue to improve.
So, yeah, he is talking a lot about the fact that he has these big auditors as a public company and that they're saying that they've got, but are they, I'm not even actually sure that they're actually saying he's got the Bitcoin. They're just auditing MicroStrategy generally like to SEC standards. But in any case, I think as a public company, you do have to trust the auditing of the company. I mean, he's not wrong about that.
No, you certainly do. And you certainly do with traditional assets. It's just Bitcoin isn't a traditional asset. There's several reasons why I think auditors are insufficient. I mean, chief amongst them, they're people just like us. So they're as susceptible to collusion or anything else as we are. There's really, I think, 4 or 5 main points. I mean, one is that, the auditor, they can't really verify what they don't control. So typically they rely on screenshots, API exports, or statements provided by the custodian. So not on-chain cryptographic proofs. So if a custodian lies or omits data, the auditor can be fooled, just like FTX fooled Armanino in that case. Number 2 is that...
Right, or Enron fooled Arthur Anderson. I guess it was even worse than that with Arthur Anderson. But again, they're people.
Yeah. The other is that they don't or may not understand UTXOs or even multisig, for instance. So there's a few legacy auditors that deeply understand Bitcoin's technical mechanics, like multisig quorum structures or change address hygiene. So they treat Bitcoin just like another asset class rather than a self-verifying ledger. The third point is that audits aren't periodic, or they are periodic. They're not real time. So most audits happen quarterly or annually, and Bitcoin moves in minutes. So, a clean audit from 2 months ago tells you nothing about the wallet today. And then my main point is that auditors can be co-opted or pressured. So in traditional finance, audit firms sometimes rubber stamp financials due to conflicts of interest or risk losing the client. And in crypto, that dynamic is much worse because companies often shop for the most lenient or inexperienced audit firm.
Yeah, and the big ones for years have declined or neglected to offer services to crypto as well.
Right. And I mean, they're also not liable for hidden risk. So, when fraud is discovered, auditors usually escape consequence unless gross negligence is proven. So clients and investors bear the damage. With on-chain assets, you just don't need to trust any of that. You have the math. There is an endless list. I mean, FTX is the most recent, but Enron with, Arthur and Anderson, Wirecard in 2020 with EY, Lehman Brothers with Ernst & Young, PCAOB with KPMG. I guess the point is that it's so antithetical to Bitcoin's sort of thesis, which is that you don't have to rely on any group or any entity in order to have basic transparency. And so this argument that I keep hearing where we have auditors or a publicly regulated company basically trust the government because the government has final say or has some sort of like judicial control over what these entities might be doing, to me is wholly insufficient and just I think just an abuse of Bitcoin itself, frankly.
Yeah, and if you look at MicroStrategy, which now holds 580,955 Bitcoin, which is what, 2% of the supply, worth 60 billion. I think it's quite reasonable for Bitcoiners to be asking him about this, right? It's not like a crazy thing. He's rapidly becoming systemically important to the Bitcoin market. And so for him to dodge this question, I mean, look, I think he needs a better answer because Bitcoiners aren't going to stop asking it.
Well, I think he needs a better answer, but I think he also, and maybe us as an entire industry needs to sort of assess this thing in a real sort of mature fashion. I keep thinking that this is such a break from normative finance. To me, it's kind of like when double entry bookkeeping was introduced by Venetian merchants in the 1490s. There's a lot of confusion and resistance because merchants were used to single entry records and informal ledgers, and double entry felt complex, rigid, and unnecessary until it became the backbone of modern finance. Even with like SSL encryption of the web in the early days, I'm sure you remember, HTTPS seemed unnecessary for most sites until privacy breaches were made standard. And even like, GPS and phones, they were first seen as invasive and unnecessary, but now it's so fundamental. So, I mean, POR for me is like the GPS of crypto custody.
Yeah, it is. It seems like baseline stuff at this point. Well, all right, let's move on from MicroStrategy. I think, the pressure, they are going to continue to be asked this question. And when I say that they should have a better answer, well, even if the answer is we're not doing it, they should come up with something better than the security, because that doesn't seem like a good answer.
Well, and just one final
But they should also do it.
I mean, as you noted, about 2% of the supply. It's not trivial. They're so relevant, I would argue, in a geopolitical sense too. I mean, they're really setting standards not only for public corporate companies, but I think also for nation states as a function of being so large. I mean, they're not irrelevant at all. So I really do see Michael Saylor as having this responsibility in the space to promote something that really would make it such a differentiating factor from the way normal assets are.
Yeah. And shout out to MetaPlanet for being a publicly traded company that does proof of reserves. Also, by the way, shout out to River, a great Bitcoin brokerage that I like to use that does an incredible POR every month. That, again, it's possible.
River, just on that note, has gone above and beyond. They not only, have given verification on their assets, but also their liabilities in a very public and transparent way. So, I mean, that really should be the standard moving forward. It's just, remember, there's two reasons why this hasn't become more pervasive. One is that most customers who hold their funds on exchanges aren't as technical as ones who self-custody. So I don't think they understand this function of auditability. And so they haven't demanded their custodians to be transparent. But the other is the lack of regulatory oversight here, which frankly is a good thing for us as Bitcoiners. A libertarian mindset certainly comes in, but that's where the self-regulatory regime should really start taking place.
Yeah. Sam, let's talk a little bit about the strategic Bitcoin reserve concept and thing. The thing is, I think, still taking form, but if the U.S. government, or frankly any government, but let's talk about the U.S. government, were to hold Bitcoin strategically as an asset, which they are ordered to do by the president, should they do proof of reserves? And have you thought through this? And what is it? Are there any unique considerations versus a public company or, an exchange?
I don't think there are. I mean, I think there should be more thought put into it because this literally is more geopolitical. But we're working with the Bitcoin Policy Institute for inserting language to become sort of like the state framework for, in this case, states to adopt their own type of SBR. But even at the nation state level, again, there isn't any risk in being sort of public for a thing that's already public, given that the volume is so large as well. So it's not something that people just can't find or figure out. It's more about promoting this type of hygiene and understanding sort of how Bitcoin functions the way it functions. And just a reminder for the audience, no one knows how many US dollars are existence in the world, nor how much gold is in existence. There's no actual literal number for it. They're estimates. With Bitcoin, any third party could download a server and audit the thing without any permissions down to the smallest unit. That alone for a monetary system is, I mean, I really can't overstate it. It's so revolutionary.
Yeah, it really is. I feel like it could end up becoming like almost the primary use case for public blockchain assets like Bitcoin. I mean, less so Bitcoin's got a strong use case as an asset, but think about like securities, right? If you own a stock, you follow it all the way down and then it's just sitting there in the DTCC, right? And it's like, what is it, right? And how, and is it really there? I mean, we don't really know, and you could know with public blockchains.
Yeah, and I think a lot of this is cultural too. I mean, we're blessed here in the West where we have strong legal frameworks and we have good, robust regulatory parameters, but this is sort of the Wild West. I mean, we're talking about sort of building towards a world that is more unstable, not because we want it to be, simply because that's where we're headed. And having these proper protocols in place, I mean, it's just not going to be optional after a certain amount of time. It just depends on how much time that actually takes and how much blood needs to be shed in that interim period.
Sam, before we wrap, tell us what Hoseki's up to, how Hoseki is contributing to this transparent world.
So we have our community board that any institution, government, public company, miner can publish through us, depending on what parameters they want to have public, being sort of that bridge in between no transparency at all and then full transparency, which is disclosing that these are our addresses. So we have that up. And our whole thesis is promoting the idea that if you self-custody, you are at the same level as an institution on the Bitcoin blockchain. So if you hold your own keys, you effectively, for the network, are equivalent to Coinbase, irrespective of how much you actually own. And giving Bitcoiners that opportunity, giving them the tooling in order to leverage their funds is critical. Right now, if you walk into a bank or if you walk into any other sort of financial institution trying to get credit, claiming that you own Bitcoin, They're scared because they don't have the tooling in order to verify that it's yours, in order to incorporate that into your financial profile. So we are just launching our new sort of DocuSign process that allows you to cleanly and easily give that disclosure over to a counterparty. So we're in alpha testing right now, but that'll be live. And we have some really exciting partners that I think is going to sort of shake the Bitcoin world pretty soon.
Yeah, and I'm just showing here on the screen the Hoseki leaderboard. And we've got 37.8K Bitcoin verified by Hoseki at Bitwise. So that is the largest Hoseki verified pot. But look at these. We got to get these guys. We got to get them on there.
I mean, shout out to Bitwise. They really were the first runs through the door. And it was interesting for us too, because I've been advocating, and you know this for years, both at Fidelity and afterwards, about sort of implementing proof of reserves. And I always thought exchanges would be the first through the door, but it turns out that it was an ETF issuer.
Yeah.
So Bitwise, has done a lot. And
it makes a lot of sense because those ETFs are highly competitive. They have very low margins, right? So differentiating yours from the others, especially if you're not, BlackRock, is, I think, very powerful. So, yeah, shout out to them, and shout out to you, Sam, and the team at Hoseki for trying to drive transparency in the Bitcoin market. I think it's very important. And where can people follow you?
At Hoseki app on Twitter and at Sam Abbassi on Twitter.
Well, Sam Abbassi, my friend from Hoseki, the well-known Bitcoin proof of reserves company. Thank you so much for coming back to Galaxy Brains.
Thank you, Alex.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Sam Abbassi, CEO and founder of Hoseki, the Bitcoin proof of reserves company, and our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.